Kitco News is in Toronto for the PDAC, the world's largest mining convention that attracts over 20,000 people to the city. Earlier, we spoke with one of the speakers and the chairman of GFMS, Mr. Klapwijk. We asked him about rising interest rates, with China and India announcing that they would raise rates to fight inflation, and the ECB even saying they may increase rates before April. What would this mean to precious metals?
Well, I think it will moderate demand a little bit insofar as clearly the interest rate cycle in some countries has turned. The Europeans are first, perhaps amongst the larger economies, to start to tighten monetary policy. I don't think they're going to tighten monetary policy particularly aggressively. I don't think, in fact, the peripheral economies in Europe would wear that. But clearly there's going to be some degree of monetary tightening in Europe. The Chinese are already taking steps to try and rein in what they see as speculative bubbles in property and very high food prices. They're raising interest rates there. But again, I think more baby steps rather than very aggressive rate increases that would really change the backdrop for precious metals demand. So I think what we will see in conclusion is some mild negative, shall we say, coming from these interest rate rises, but nothing that will derail demand for precious metals from particularly the investor sector. If base metals demand, particularly say from the investor community, is going down because people are becoming more risk averse, for gold and silver that can conversely mean that investors are more interested in buying gold and silver as safe haven assets. So you can get this rather different trend at times between demand for base metals, which comes off as people become more risk averse, and precious metals, where the demand actually revs up as investors get more concerned about economic or political developments. And we're seeing that, for example, at the moment a little bit with the Libyan situation. It's a bit of a dampener perhaps for base metals prices if this is seen to be negative for the global economy, if high oil prices are seen to be a negative down the track for the global economy. But for precious metals, conversely, and particularly here I'm thinking of gold and silver, tension in the Middle East and North Africa may be rather good for gold. It raises inflation expectations also. So again, that's positive for gold and silver. Well, I think silver seems at times to defy gravity. Certainly we've seen a lot of volatility in silver and a general bias to the upside, a very strong bias indeed to the upside. And I really wouldn't be surprised if we see $40 silver, perhaps even in the next few weeks, as long as investor demand keeps on coming.
Wow, $40 silver.
Well, it may seem like wow, but just look at where we've come from in the last few weeks. This market has already moved up the best part of $8 since the sort of low was reached several weeks ago for the silver market. So a further push of $3 and change is by no means impossible given current market conditions.
And finally, just to touch upon GFMS's forecast for gold for the year.
Well, we're still holding with our forecast, which was for an annual average price of $1,477 this year. We think that's certainly achievable. It will require, I think, a lift above 1,500, perhaps during the first half to make that achievable, but I see no reason why gold can't push somewhat higher over the balance of this year, although I think at times we can also expect the possibility of some fairly severe corrections.
We will have more coverage from the PDAC, so stay tuned to Kitco.com. For Kitco News, I'm Daniela Cambone, Toronto.